It is 8:39 exactly, and next online we have Farid Khan. He is the Regional Director for SARS Gauteng South, and we are going to be talking about the issue around changes for taxpayers who receive income from retirement funds on top of other sources. They're going to be seeing changes in the way they're being taxed in 2022. And I do hope that equates to some good news for retirees. Farid Khan, Assalamu alaikum, welcome to the program.
Wa alaikum salam wa rahmatullahi wa barakatuh. Thank you, Julie, and salams to the listeners as well.
I do hope this is going to be a bit of good news. So let me kick off with my first. Let me kick off with my first question. How will the new changes impact on retirees?
Okay, so Julie, first and foremost, perhaps before I answer that question, let me explain very quickly why the change. The change is in line with SARS's commitment that we will make it easy for taxpayers to comply. So in line with that strategic objective, this legislation change came about. Now, the legislation will have zero effect on the total taxes paid by taxpayers. That's the first piece of good news. The second piece of good news is that this piece of legislation is attempting to ensure that retirees are not faced with a huge tax debt on assessment. In other words, at the end of the tax year. So this legislation is meant to smooth the PAYE deductions on a monthly basis in such a way that the taxpayer is not faced with a tax debt at the end of the assessment. And that is, in essence, what this legislation is about.
So, Farid, in fact, what you're saying to me is that a retired person will still be paying the same amount of tax. That's basically no increase or no decrease in their rebate, not rebates, their tax payment to the taxman. Rather, it's the way it's being restructured, the way it's being paid. So it would be like monthly rather than annually. So what you're saying is that at the end of the year, you're not going to have a huge lump sum that you've got to pay out. It's going to be broken down over 12 months, so you don't feel the pinch or the punch.
Absolutely. Yes.
As hard.
And I couldn't have put it better. So that is exactly what it is. So it's going to impact retirees who have more than one source of income, as you correctly pointed out. So there are many people out there who receive a pension benefit from their deceased spouse's pension as well as their own pension. Now, each one of them tax the income individually at a particular tax rate. But when combined, because South Africa has a progressive system of taxation, when combined, the total tax might be a little bit higher. So instead of owing SARS 1,200 Rand at the end of the year, which you do not necessarily have, SARS will smooth out that and deduct 100 Rand extra from your pension every month so that you are not faced with that tax debt at the end of the year. That's the be all and end all of that legislation.
Okay, all right. So will this happen automatically, or do retirees have to make some sort of special arrangement? Do they then have to interact with SARS and say, right, I'm a retiree, I have an additional income, I have a rental, I've invested in property and I'm gaining rental every month of X amount, which I presume the taxman is already aware of. Yes. What's the process going forward?
Okay, so there are two separate processes. The first one is if you receive multiple incomes from a salary or a pension fund, then SARS will take care of the adjustment for you. So this is again in line with our strategic objective to make it easy for taxpayers. So we will inform the pension fund that person has a secondary income, please adjust the tax rate accordingly. So that part SARS will take care of. However, there's a second part. where, for example, you have rental income or you have other income that where the source of the income does not withhold tax for you. That, unfortunately, the taxpayer would have to take care of himself or herself. But that usually is taken care of via provisional tax. So there's no need to adjust tax rates. You can take care of that via provisional tax emissions, which is every 6 months.
Okay, so here's me thinking there's some reprieve for retirees or pensioners earning an additional income. What if there is an additional income source which changes hands on the quiet, so to speak? I shouldn't be talking to you as a taxman about this, but anyway. You know, you have a little granny cottage or something, and you're deriving an income there, but it doesn't go through, you're being paid cash, it doesn't go into your bank account or anything. What happens in that situation? Do I have to declare it?
Yes, so hopefully that doesn't happen too often, Julie. Inshallah, everybody that is listening is honest in their tax declaration. So yes, the answer is yes. Where you get additional income from any source where there is no withholding tax, no PAYE deducted, you are required to declare that in your tax return. And I just want to raise a word of warning, if you like, to taxpayers out there, that SARS is increasing its usage of data. And it's gathering significant amounts of third-party data from municipalities, from banks, and SARS is becoming more and more aware of these so-called cash transactions that is becoming a source of income for many people. So things like people have a secondary property, or they have a granny flat at home that they are renting out. SARS, I'm not saying we have all of the data at this point, but we are gathering a lot of data from all municipalities, local councils, and metros, as well as financial institutions. So in all likelihood, SARS will eventually find out. So it's best to declare honestly now, because if SARS finds out 5 years later, they're going to tax you retrospectively. So that's my advice.
Okay, so basically Big Brother is watching all of the time. Fareed, let's just look at another scenario. So you're a pensioner or a retiree, you have a half a dozen children, adult children who are all obviously, on their way, and each child gives you, spending money or whatever it is every month. And let's assume that amounts to a couple of R1,000 a month. Do you have to even declare that or not?
Look, Julie, I don't have the piece of legislation in front of me, but family member contributions are not considered to be income in the hands of the recipient, especially where children are contributing towards the upkeep of the parent or contributing towards monthly expenses of the parent. That is, family-to-family donations are permissible. There is a limit. I think it's 100,000 rand. I'm not 100% certain about that, but no. I contribute to my mom, for example, and she doesn't need to declare that because it's not a million rand or 100,000 rand a month kind of thing. So
what confounds me, what confounds me in this whole situation is that, let's assume we're talking about a retiree. They've worked for 40 or 50 years of their lives. They've been honest, hardworking people. They have paid their taxes diligently. And now in their retirement years, they are being taxed yet again. Shouldn't we make it easier for them? Shouldn't we allow them those last few years of luxury without taxing them?
Ideally, yes, Julie. Unfortunately, we don't live in an ideal world. But there are so many tax provisions that allow for relief to retirees. For example, investment income. There is and I don't encourage the earning or the dealing in interest, but there is the interest relief, which is the interest exemption of, I think it's around 26,000 Rand a year. There's dividends taxes. If you invest your money wisely and you earn dividends, then dividend taxes are at a significantly lower rate than income tax. There's the CGT provisions of the law that says if you invest your money and you gain capital growth, then CGT is taxed at a significantly lower rate. And all of these pieces of legislation are meant for largely for retirees to ensure that we do not overtax them. So there's quite a few provisions in the law that makes it easier for retirees.
Okay, finally, I need to get you onto a 1-hour show to really talk about tax matters in detail, but we'll revisit that, inshallah, in the new year. My final very quick question to you is, for a long, long time, I know government has been urging the general public to save more. And I kind of think that this is a double whammy as far as retirees are concerned. So you save, you invest, and then, when you're wanting to enjoy your savings, you're taxed again. Just my thoughts on this whole issue.
And Julie, I think the suggestion of a 1-hour show to discuss this is probably the right way to go, because it's not something we can explain in a few minutes. But like I said, there are many, many pieces of legislation in the Tax Act that allows relief for people who have invested wisely. And we can discuss that in a much lengthier show. Inshallah.
Okay, inshallah. We have to wrap up now. I really am thinking in terms of incentivizing the taxpayer rather than the taxpayer thinking that they're being punished. But let's leave it for the show that I'm alluding to. Jazakallah for your time. Go well and keep safe over the holidays. Salaam alaikum.
And to you and the listeners as well, Julie. Thank you.
Jazakallah, Jazakallah. It is exactly 8:52, and in a minute or two, we are going to be talking with a Maulana about the issue around banning of the Tabligh Jamaat out of Saudi Arabia.
Osman's Taj Mahal